I'm Michelle Rook. Clinton is on assignment tracking down how spring planting is going right now. While it appears as if China and the U.S. may be de-escalating the tariff war, one commodity that's been surprisingly resilient during the heat of the tariff war has been soybeans. Market analysts were bearish soybeans to start the year, especially with the big South American crop projections. However, the market has surprisingly rallied during April in old crop contracts, even extending above the 200-day moving average last week. So what's driving the resilience? Well, a number of factors, including demand, as exports to date are now running 13% ahead of last year. Japan was the top buyer last week and says they plan to buy more soybeans to avert U.S. tariffs. So other countries are stepping up to buy U.S. soybeans as Brazil's prices are higher, driven by China shifting to buy massive amounts of soybeans from Brazil.
Look for that the Brazilian export program to be extended, and that's pushing non-Chinese business to the United States, most importantly for July, August, and September. So I'm raising my old crop soybean export estimate by 40 million bushels to 1865. That tightens end stocks and gives the old crop market a little more bullishness.
Soybean oil prices have also hit new highs on exploding exports, now totaling over 2.1 billion pounds, a 14-year high. And more demand is coming, with India potentially buying bean oil under a new trade deal, and EPA could raise mandated blending levels for biomass-based diesel in the RFS for 2026. However, even new crop prices have been supported on the lower U.S. acres.
You start looking at that new crop balance sheet, Michelle, and I'll tell you what, it's razor thin at 83.5 million acres. There's still people talking, maybe there'll be some acres switch over to corn this spring.
Farmers said in March they intend to plant 3.5 million acres less soybeans versus 4.7 million acres more corn.